I would say you want to accumulate more silver than gold right now, because at under $30, it's still half of its, all-time high. And if you adjust that for inflation, it's really down. And then if you add the structural deficit of silver's use for solar, electric vehicles, AI data centers, aerospace and military, and as a catalyst for hydrogen fuel cells. And then on top of that, there are no new silver discoveries. I know you've had some silver miners on your show. They'll tell you the same thing. You can't do better right now than stacking as much silver as you can afford. So I'd say you want to accumulate at least 10 ounces of silver per week. I see silver, triple-digit silver.
Although starting its rally later than gold this year, silver ultimately emerged as the best performer within the commodities sector. Looking ahead to 2025, many analysts and investment banks believe silver could once again outperform gold despite potential hits to industrial demand, particularly in the early months of the year. Historian Jon Forrest Little argues that while banks manipulate silver prices, it remains a solid long-term investment, especially in times of crisis. Little notes that silver's value could increase significantly as the national debt rises. Analysts at Heraeus Precious Metals support this view, projecting in their 2025 forecast that silver will outgain gold if market conditions unfold as expected. They emphasize that the elevated gold-to-silver ratio suggests silver is still historically undervalued compared to gold, despite its strong rally this year. Silver tends to outperform gold in the later stages of bull markets, and a reversion to the 27-year mean ratio of 67 due to a rally in silver implies a price of $40 per ounce, they stated. According to Jon Forrest Little, the gold-to-silver ratio is around 80, with silver priced at $29.50 and gold at $2,615. Both metals have risen by over 30% this year, with silver up 34% and 35% and gold climbing 31%. However, silver tends to underperform gold during recessions. If industrial activity contracts, growth in industrial silver demand may be limited to outside sectors like electronics and solar photovoltaics. Nonetheless, its long-term outlook remains promising due to its broader role in emerging technologies and its undervalued status. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Now let's look at the gold to silver ratio. It's probably 80 today. I think I saw silver was around 29.50. Gold was around 26.15. By the way, they're both up over 30% on the year. Silver up a little more, 34, 35%. Gold's up about 31% in a year. And I hear people whining about gold and silver. And I'm like, they're up, over 30%. So let's be grateful for that. Now, I would say you want to accumulate more silver than gold right now, because at under $30, it's still half of its, all-time high. And if you adjust that for inflation, it's really down. And then if you add the structural deficit of silver's use for solar, electric vehicles, aerospace and military, and as a catalyst for hydrogen fuel cells. And then on top of that, there are no new silver discoveries. I know you've had some silver miners on your show. They'll tell you the same thing. You can't do better right now than stacking as much silver as you can afford. So I'd say you want to accumulate at least 10 ounces of silver per week. I see silver, triple-digit silver. We know how the bankers manipulate silver. It's such an old playbook. You make it look like it's selling off through a paper transaction. So we know that the paper to silver ratio can get as high as 400 to 1. So let's explain a derivative. A derivative is something that is a financial instrument that derives value from an underlying asset. So if you sell a year's worth of silver mining production in a day, it looks like silver's unpopular. Now, who would do that? Well, people that are captains of industry that are using the silver also sit on bank boards. So Elijah, if you and Dunnigan and me, we started Hershey's, we would root for low sugar and low cocoa. And we would want low factory inputs. Now that's what's happening with silver. And I read the the comment fields where people are going, good luck staying poor. What's going on with silver? Why would you buy something that's manipulated? Well, precisely because how long can you hold that beach ball underwater before it balloons and catapults to the top? I bet I don't know you well, Elijah, but I bet you're a fierce stacker yourself. I don't think you would get into this business unless you have a passion. It's almost like I've been accused lately by some Reddit people behind cartoon masks as being in a cult. It's like, well, there's some similarities. We don't worship silver and gold, but we do know that every time a fiat instrument fails, from regime to regime, from war to war, that silver and gold step up to do the accounting for the failure. So now you're going to ask me, well, what will the reset look like? It's basically you take the ounces of above ground and divide by the debt. And let's just take U.S., $36 trillion of debt, and divide it by the gold reserves they say we have, and there's your fundamental value of gold.
For many central banks, the growing interest in gold reflects deeper concerns about global stability. Some focus on the risks associated with their reliance on the U.S. dollar, which has long been uncomfortable but now appears increasingly dangerous. This shift has been most notable in China, India, and Turkey, with gold buying surging after Russia invaded Ukraine in early 2022. In response to the conflict, the U.S. and its allies imposed heavy sanctions on Russia, including freezing approximately $280 billion in state assets held abroad and excluding Russian banks from SWIFT, the interbank messaging system vital for cross-border payments. Additionally, American firms Visa and MasterCard ceased processing debit and credit card transactions in Russia, further isolating the country financially. Jon Forrest Little notes that central banks continue to purchase gold, signaling future value increases. This trend could reflect an anticipated rise in gold prices or a loss of confidence in fiat currencies. Some central banks are acquiring gold and shipping physical bars to domestic vaults, which suggests they are preparing to shield themselves from potential economic warfare. The steady accumulation of gold by central banks underscores their desire to diversify away from the dollar and protect their reserves from geopolitical risks. Let's get back to the interview.
The reason their gold's inventory above ground has stayed almost mirrors to the population, because we can only mine gold as when it's profitable to do so. And pretty much every ounce of gold that's ever been surrendered by Mother Nature is still there, with the exception of a few pirate ships that are still missing. But whereas silver is consumed in industry, so that's why there's less silver than gold. But still, we know that the gold to silver ratio is going to revert to its historic mean. It may not go actually in biblical times, I believe it's 15 to 1. We'll have to ask Rafi. Or David Morgan wrote a really good book, Silver Manifesto, about that. Let's just take double that. Let's say it goes to 30 to 1. Well, that would be an improvement. That would double the price of silver overnight, just reverting to another ridiculous figure like 60 to 1 or 40 to 1, let's say, from its 80 to 1 position now. So and meanwhile, gold is still rising. And why would every central bank be buying it if it's not going to go up? Or is just the fiat going that far down? Like, are houses getting more expensive? I always have to tell my wife this. Is the toilet any better? Is the granite in your kitchen better? Is the bricks are cladding the house any better? Or is just the dollar that crappier? So that's sort of what it starts playing tricks with your mind as we go down these intellectual rabbit holes. So we have what's really considered a fascist state is when U.S. corporate interests align with U.S. government interests. It's really based on war profiteering, which was just like Rome. The model was to steal your neighbor's resources and enslave the losers, which is similar to what we do with our IMF and rigging foreign trade, mostly in Africa and Latin America, setting them up basically to export everything they have of value to be favorable for U.S. investment, like turning Honduras into a banana republic, or before that, Cuba was a sugar republic, and then Brazil became a rubber republic, and treating different countries as if they're just an aisle in the commissary is just an immoral and unwise way to conduct your foreign policy, just propped up by the U.S. dollar, which the only thing propping up the U.S. dollar today is our military, especially since Nixon closed gold convertibility in 1971 and Kissinger, we lost the petrodollar status that Kissinger set up shortly after Kissinger closed the window.
With silver emerging as the top-performing commodity of the year and gold acting as a safe haven amid geopolitical tensions, both metals are set to play key roles in shaping investment strategies moving forward. While the outlook for industrial silver demand remains uncertain, historical trends and current market dynamics support its potential to outperform gold in 2025. On the other hand, central banks are increasing their gold reserves, signaling a shift towards diversification and protection against potential economic turmoil. This dual interest in precious metals underscores the evolving financial landscape and the importance of hedging against uncertainties. How do you see gold and silver performing over the next few years, particularly in terms of currency devaluation and industrial demand shifts? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.